Okay, so I'm going to do a quick recap of yesterday's trade. Went beautifully, as you might know. Um, so yeah, let's jump in. The Okay, so I'm not going to go over everything that I went over in the last video, so you'll have to go back and watch that. But the short and sweet version of it is effectively this low here has tapped into some super high time frame areas of interest that include a daily demand zone, and this orange line that you're looking at right now is the 50% mark of a large macro swing range. Okay, so we've had that nice move. We've also taken liquidity, yada yada yada. This is an area where on a high time frame we're expecting some sort of sign, or we're looking for signs that will show us that this is an area where we want to be looking for longs. Okay, this is a probability game. You want to be playing on the side of the probabilities. Okay, so how can you do that? Well, first off, what I like to preach and what I've been talking about a lot. Where's that over there? Come back. Fucking hell. Right. And what I like to preach is you need a level doesn't have to work just because it's there. You have to wait for your confirmations. Objectively identify your edge. Okay. So how do you do that? What are you looking for? You need to see things like this. Okay. So this was the confirmation I was looking for. Yesterday, we clearly identified it. First thing we did on the chart, right? We went down to the 15-minute and we saw that we had a break of structure and a break of internal structure, okay? This was our internal high. It was the last high that broke the previous low, okay? So it formed a new low. So that was our internal swing high. Once that had been broken, that showed us the sign of intent that we were looking for. We've hit into a very large region that we're expecting some sort of movement from, and then we then see the internal breaker structure. Okay, so that's our first sign. That tells us, okay, start looking for trades. So take the low, take the extreme of that move, and then we look and we find a nice 5-minute OB. Okay, now the origin of that 5-minute OB, look what happens, right? From the origin, you've had an impulsive move. Well, obviously this is low time frame, so it's not crazy. It's still in London, yeah, whatever. But this is an extremely large market. It takes an awful lot of money or intent to move and break structure. Okay, so by breaking this bearish internal structure into a bullish internal structure, it takes a lot of effort. So it has to say that there is, big players in this area here. This is a sign of potential institutional demand. So this is a potential institutional order block. That gives us the idea that if price does retrace into those levels, that they're going to defend their positions. Okay, we've got the overall high time frame context on our side, and now we've got the 15-minute context on our side. Okay, so we identified this 15-minute zone here as our POI. Doesn't mean we're just going to blindly long in there. It means that when it reaches that level, we're going to set an alert. We're going to pay attention. That's exactly what we went through yesterday. We put a big exclamation point warning signal here. We said there's the 50%. Pay attention when it gets into this level, okay? We're looking for signs. Now, as price was around this area yesterday, you can see that as we move it on, start to chop around. We then make a low. We don't break into the 0.5. We then break the high again. So we're thinking, oh no, this is getting off without us. But it wasn't to worry. This is where patience comes in. This is where if you were so intent on trading this move, you could have potentially made a very bad error in that situation. Okay, then come up and you consolidate a little bit more. What do? You spend enough time in there that you form a new 15-minute area of supply. Okay, at that point, you can see play price on, come back up and you retest it. Now, during the day, I was looking at this level. I was very much considering a short. I didn't take it because I didn't see. Ideally, I would have seen this where you get that area of supply and then you break that level there. So you break that low. You show that there's some intent, even with a wick, some sort of sign that that was an area of strong area of supply, and then you come up. That would have been 100% a short for me. But you'll see in a second that it gave us the signs that the short was there anyway. So play it on. What happened there? You get that liquidity grab, right? You get the liquidity grab, then you break this internal structure here. That low there, that was the low that broke the previous high, okay? There's a nice liquidity grab above this area of supply, this little consolidation zone, or whatever you want to call it, order block, yada, 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 and you get that move down. That is a good sign that, you know, you've got a decent short there with a clear invalidation, okay? Could have done that, you could have scalped that, but you may not have got there quick enough. Right, so now we've dropped into our area of interest. You see you got a slight reaction, and then you carried on, okay? So if you were blindly long in the area I gave you yesterday, not only are you now in drawdown, that you weren't waiting for the signs, okay? Like I keep talking about, you weren't waiting for the signs that we clearly need to find. You need to objectively identify your edge, okay? And that's what it's all about. Now, playing forward a little bit, what happens, right? Now we get a reaction from our area of interest. This is the 5-minute zone we were just talking about. We're underneath the 0.5 of this area here. Take that out. Now underneath this area of interest, take that out. Okay, we're below the 0.5. That means we're in discounted levels. So we're definitely interested in longs. We're now seeing reactions from our levels. Okay, play it forward a little bit. Right now, what do we see? We see that we've got a high here. We've got a high here. Okay, so when that takes that out, that was a sign for me that we potentially have made the move, or we're starting to make that move. So for me, when we retrace back into this level, I started longing on my BingX account, okay, which is like my swing account. I'll show you the shot in a sec, whatever. But I started longing there. I had a clear and obvious invalidation, okay? I was happy to long that position. I felt like I'd seen enough from this, and I was happy to long that, okay? That's exactly what I did. I longed right there. Then, if you carry price on, I'll take it a little bit slower this time. You can see that price breaks down again, okay? So price breaks down again. This is now the high that took out the previous low. So this is now your internal low. So this is where you're waiting for the extra confirmation, okay? You could have taken the trade like I did then, but there's also an extra level of confirmation, and I'll talk about that as we move on. Now, you go into the level, you get very, very close to the invalidation. You've now got that clear level that you need to break for intent. You break that level, and now it becomes a case of how can I get into the trade? Now it becomes a case of chasing this, this move now. You've had the break here, this internal break that you were expecting. This was the high that broke the previous low. You've had that. This is your confirmation. Here's your invalidation below these lows. This is a clear and obvious trade, okay? So what you do in this instance, this is what I was doing on my Top Step account. I clearly just pin a Fibonacci to it. I add my limit orders around the 0.5 or the 0.6, or I look for other areas of demand, and then I basically just track it up all the way until I eventually get my retrace, okay? So, you keep going, you keep going, you keep going, there you go. I've got my limits, I'm constantly following it with my limits. You get that retrace, you get another one. Now I'll show you why this was a bit of a special instance at the moment. You keep going, you keep going, you've got to remain patient. Okay. Now, if you're looking at this, we're coming into around 12:30, 1:30 UK, normally a bit nuts. Okay, I don't really like trading that much, and this next trade could have really gone against us. But I was happy with my invalidation. I was still within my loss at limit, or my my predefined risk for the trade. There's a certain level that I'm happy to lose, and if it goes beyond that, then I'll probably let the trade leave and go without me. So we're looking. There we go. We're still moving up. And now you might be thinking, oh, the level was way better down here, but it was a lot riskier. I had my tight invalidation, but I was also using an account that doesn't use as much size. So while I'm looking for this trade, I'm looking for more of that sniper entry where I'm literally trying to take minimal drawdown, because I'm using a lot more size in my Top Step account. And eventually the news will come. There it is. So there's your clear sign there. So I had my entry right at the 0.618. I had my Fibonacci right there, and then as the news comes out, as it always does, at 12:30, 1:30 UK, you get that move. Now, it was a bit dodgy, I'll admit. If it could have easily flown through and killed everyone out. Could have killed, because I have a limit here, and my stops is down here. Okay, I'm just tracking that up all the way. And then eventually it comes down, it bangs me in, and then what happens from there? You run into UTC. So this is another 15-minute order block here. Now I'll call it UTC because it's midnight UTC. It's not actually technically the daily open or the CME daily open. You know, you retest that level low. So I like to see, you know, that level shows a lot of respect, and I like that level. Now at this point, you're probably looking up towards settlement that we talked about yesterday. If you look at the S&P chart, it hit perfectly. And that could have been a level of confluence. So I'll be looking at that in the future, and that's the chart I was trading with on BingX, and that was my take profit when it hit the settlement perfectly. But you know, play it forward to go into, we're running into New York Open now, and my idea is like, right, I've made more than enough in this trade. I'm very happy. I have all my stops are in place. I may as well cut my big trade, and I'll wait and let my stops and my take profits take out the rest of the trade. So play it on, and what happens? You get a nice little move into New York, and then boom, you come back into UTC, and eventually you break down. Okay, so why did I play it to that point? Because it's clear that what you need to do in this market, especially with trading something like a Top Step account, is, you know, a funded account. You need to always pay yourself when the market makes money available to you. That's such a crucial component to remaining consistent. So when we got up to these high levels and we were approaching New York, it just wasn't worth the risk for me. I understand that the New York initial balance is just nuts. It's just really not worth holding on to that trade. When we got this spike up, if you look at, so this was the trade here on the S&P index. I set my closing price at 4184. If you look at the S&P index, hopefully this works nicely. It's probably not going to show us now. Yeah, it showed beautifully on BingX. Oh, fucking. Anyway, check out BingX. It works so good. But anyway, eventually you get that breakdown. You come back into the level that was our area of interest. You then bounce back out of it, and then, you know, the rest is history. I was too busy with the rest of my day to bother about this. Probably a bit too long-winded, this video now already, but if you look into what was happening at the time, that was also an area of confluence for that short we talked about that we could have taken. You know, you hit the value area high on the day. I then mention in here, we've hit this level. This is the point where I'm looking at taking my longs on BingX. I hit those longs, and we eventually get that move we were looking for. There's the breaker structure I just talked about. You can see there it is. Come on down. There's my long, that was fabulous. Cherry on the cake, you know that. Oh yeah, and right here is my entry. Okay, so I'm just following this all the way up with my fib, exactly like I just talked about. It wicks down, it takes my 618. Okay, could have left me behind, but it was a risk I was willing to take. You know, you're trading with a lot of size in these things, and you need to be very, very, very careful on your risk management. And yeah, came back up and we touched this UTC area I was talking about, and you know, that was where I left the trade, up at these regions here, coming into New York. And yeah, that was it for the day. very nice. That's about it. Yeah, and that was my take profit on the S&P index for BingX. And yeah, that was the trade for Top Step funded account. You see here, made 1K. It was around 70 ticks or something like that. The closing time was around 2 p.m. local time, so it was half an hour before. I entered at exactly 13:30, and it was a 27-minute trade. So I wasn't trying to hold that all day, because that's how you lose, really. But yeah, it played out really nice, and I'll finish on this really. Objectively identify your edge, predefine risk and accept that risk, execute without hesitation and never deviate, monitor yourself and your susceptibility to making errors. Be consistent with this and results will flow. I promise you. Okay? Thanks, guys. Adios.